Welcome to Learning Loans. Today we will talk about credit rating agencies. So this is going to be more useful for small size entities including NBFCs, and we will focus a little more on NBFCs who needs to get themselves rated. So what is the rating agency? These are the agencies who will give some kind of rating to the companies basis on their performance and in a way kind of predict that whether they are credit worthy or not, and if they are credit worthy, what is the chances of their defaulting the loan, or what is the level of their strength in terms of repayment of any kind of credit facilities. So let us understand which are the rating agencies. There are many, 6 or 7 rating agencies which are regulated entities. Now some of the names you have heard like CARE, C-A-R-E, CRISIL, Fitch, that is like India rating, and Informatics, ICRA. So there are lot of rating agencies, and all of them in a way are similar, same as far as the regulatory regulations are concerned. But in market, there may be different reputation, brand name of each of those rating agencies. But all, if you get rated through any of the agencies, the impact for the lender, investor is same. What are the rating names? Let us say when they do rating, how they are rated. So to understand in a layman's language, the topmost rating is AAA, then BBB plus, BBB minus, and similarly it will keep going down after BBB, double B, then B, and the last is D. So higher the rating, that means the strength of the company is very high and they will be more credit worthy. More number of lenders will feel comfortable to give them the loan. However, we must know that this rating agency does not guarantee that the company will not default. It is based on their assumptions that other people will perceive that what is the risk on the company which has been rated. Now, let us say how the rating agencies will rate you. That depends on various parameters. First and foremost is the financial performance. What is your sales, turnover, profitability, various ratios, how vintage of the business, how you have been performing in your previous debts or loans. So based on your financial performance, that is the most important criteria for the rating agencies to decide what kind of rating you should get. Obviously, the stronger your numbers are, the higher chance of getting a better rating are. Second point is they will also look at your leverage, debt to equity ratio, promoter shareholding. Another important point they will look at is your scalability. What is the possibility of you growing, scaling up the business? How is the business diversified? Either it is geographically diversified or product-wise diversified. So if the business is well diversified between various geographies as well as various products, and you are not skewed to one particular area or product, then the chance of getting a better rating is higher. One important factor for higher or better rating is corporate governance. Now, especially if we look at small size NBFC companies, they are, let's say, promoter driven companies. So the decision making is with the promoters. If that is the case, the chances of getting a good, better, higher rating are lesser. So it is necessary that you have a good corporate structure, which means if you start from directors, you must have some independent directors, you must have committees to take decision, risk management committee, audit committee, credit committee, right? Remuneration committee. So you must have independent directors and committees to take decisions, to review your performance. You must have good corporate governance with respect to all the rules, regulation, policies. They should be well-written policies, documented policies, duly approved by the board. So that way they look at how the company is being run in terms of how much professionalism you have, or it is a single person driven company. So that also plays very important role. Nowadays, they also look at your contribution to society, how much impact you are creating, do you follow ESG guidelines or not. So these are various parameters. Some of them are quantitative, some of them are qualitative, which means some will have direct financial impact, some will have quality impact to the company. And a combination of all those will actually drive that what kind of rating you can get. For small size NBFC companies, my personal view is that for any company to get a, say, BBB minus rated, which is a investment grade rating, you must have reasonable amount of capital, say around 20-25 crore rupees. You should have a leverage of around 3 to 4 times of the capital, which means your total AUM or loan size should be closer to 100 crore rupees. A sustainable profit growth of last say 2 to 3 years, and also projected growth and profitability for next 2-3 years, and other corporate governance related matters which should satisfy the rating agency to get a good rating. These ratings help you to take loans from banks, especially the private sector or public sector banks, which are far cheaper than the NBFC companies or private borrowing which you can do. And they establish that you have been independently verified, analyzed by an independent company which is regulated, which is a rating agency. So if you kind of adopt these, some of the parameters, some of the qualitative parameters along with the financial parameters, you can expect a good rating by the rating agency. Thank you.